How do we handle US dividends? Do we avoid them? Put them in our TFSA or RRSP? Hey guys, it's Adrian here, the Canadian in a t-shirt. And today I'll break down US dividends for Canadian investors. There's a lot to cover: withholding taxes, foreign tax credits, US taxes, and Canadian taxes. It can get confusing, and I get these questions all the time. In fact, just last week at BlossomCon in Toronto, I was asked this question on stage. So here's where to hold your US dividends, starting from the worst to the best. The worst place to hold US dividends is your non-registered account, your taxable account. I do not recommend this. Personally, I avoid any significant US dividends in my non-registered. Capital gains are great, but dividends are not. US dividends are fully taxed in your non-registered account. What does that mean? Well, there's two parts to it: a tax to the US and then a tax to Canada. First, the withholding tax. Whenever you receive a dividend from a US company, you owe a 15% withholding tax to the US government, and that tax is taken right off the top. So if you own Walmart stock and you were expecting $100 in dividends, you only receive $85. $15 is automatically taken off and paid to the US government. That's the 15% withholding tax, and this also applies to the TFSA and FHSA. We'll get there in a minute. Now this seems unfair. I pay a 15% tax to the US government and I also pay taxes to the Canadian government? You're right, that is unfair. That's double taxation. To avoid this, the Canadian government offers a foreign tax credit. That's good. Yes, you do pay that 15% US tax up front, but you'll get that money back from the Canadian government with the tax credit. So problem 1 is solved, but problem 2 is worse. With the foreign tax credit, you effectively avoid the 15% US taxes, but you can't avoid the Canadian taxes, and they're much higher than 15%. In a non-registered account, US dividends are fully taxable, so you pay your full marginal tax rate. Canadian dividends are taxed far less, since you can claim a Canadian dividend tax credit. But for US dividends, it doesn't apply. You're fully taxed, and this difference is staggering. Let's say you earn $100,000 in Ontario. That puts you in the second tax bracket with a marginal tax rate of 31.48%. If you earn $1,000 in US dividends, you're fully taxed. You pay 31.48% of that. If you earned $1,000 in Canadian dividends, you benefit from the dividend tax credit, and you're taxed far less, only 8.92%. That's a huge difference. Let's bump up to the next tax bracket with a salary of $120K. Now our marginal tax rate is 43.41%. If we get US dividends, we pay 43.41% of that in taxes. Canadian dividends are only taxed about 25%. Don't make this mistake. I avoid holding US dividends in my non-registered account. Why throw away 30 or 40% of that income to taxes? Instead, I focus on Canadian dividends and capital gains, both Canadian and US. Those are far more tax efficient in a non-registered account. Now, the second best account for US dividends is the TFSA. The TFSA is fantastic. I've made countless videos over the years. I love it because it's tax-free. All your dividends and capital gains are tax-free, but here's the catch. They're only tax-free from the Canadian side. You cannot avoid the US taxes, specifically the 15% withholding tax on US dividends. In a TFSA, there's no way around this. You can't waive it, and you can't claim a foreign tax credit. This 15% withholding tax is totally unrecoverable. The same applies to the FHSA. So, if you were expecting $100 in US dividends, you'd only receive $85. That $15 is gone off the top, and you can't get it back in a TFSA. But at least that 15% is the only tax you'll ever pay in a TFSA. I'd much rather pay a 15% tax on US dividends than a 30 or 40% tax like we saw in the non-registered account. And again, this 50% tax only applies to US dividends. In a TFSA, capital gains are 100% tax-free. Canadian dividends are also 100% tax-free. The TFSA is so powerful for investing, so make sure you use it right. Before we get to the best, make sure you use the right brokerage to invest for all types of accounts. Personally, I use QUESTRADE, MOOMOO, and WealthSimple. They're all great, but when it comes to US investing, I recommend QUESTRADE and MOOMOO. They'll save you a ton of money on fees. Watch this video here for a breakdown of their fees. And use my referral links down below to lock in great sign-up bonuses for all 3 platforms. That's free money for you. Now, the best place to hold US dividends is the RRSP. That's where I hold all of my US dividends. And here's why. The RRSP is the only account where US dividends are fully tax sheltered. You don't pay any Canadian taxes inside the RRSP, and you avoid the 15% withholding tax on US dividends. There's a special tax treaty between Canada and the US that gives an exemption to the RRSP and the other retirement accounts, the LIRA and the RIF. So in an RRSP, if you're expecting $100 in US dividends, you get the full $100. That's the magic of the RRSP. In fact, if you look at my RRSP, the vast majority of my investments are US dividend stocks and ETFs. But some important points. In order to waive this 15% tax, the stocks and ETFs must be in US dollars. If you hold a Canadian dollar ETF, such as VFE, then this won't work. You'll still lose 15% of your US dividend. I have a whole video breaking down this important point, so please watch that right after this one. Also, avoiding the 15% tax should not be the reason you open an RRSP. If you have a small income, say the first tax bracket, then the RRSP doesn't really make sense for you. If you're in a higher tax bracket, then the RRSP will save you a ton of money. I have a whole video on which account you should prioritize first. TFSA versus RRSP versus FHSA. So make sure you watch that. Here's the bottom line. If you're already using the RRSP, then definitely hold your US dividends there. If the RRSP doesn't work for you, then the TFSA is fine. And check out the rest of my Canadian tax videos with the silver thumbnails. Link down below. Thanks everyone, and I'll see you guys on the next episode of The Canadian in a T-Shirt. Bye guys.